Let's move on and bring on board Naveen Kulkarni to talk about the Jio deal with General Atlantic. Naveen, hi. Thank you so much for joining us on the show today. It's the fourth check really coming in for Jio. General Atlantic will be investing 6,600 crores. With back-to-back investments happening in the company in such a short span of time, do you see them achieve the goal earlier than 2021 that they had laid down earlier?
So if you ask me whether they will achieve the goal of being debt-free on a consolidated basis, we'll have to wait and watch for that, because if you look at it, it also included the Saudi Aramco number, which was $15 billion number. That was substantial. Of course, Reliance Jio is a different entity in the overall scheme of things. It's a 100% owned subsidiary. Reliance Jio becoming big-time cash positive is not necessarily means that the other businesses are also going to be net debt free, right? So that's one way to look at it. However, considering the kind of deals that they are doing and the rights issue, they are on course, is what I would say. But we will have to wait and watch out. There might be something more which is required in the other businesses also for the company to become net debt free on a consolidated basis.
Right. Hi, Mr. Kulkarni. This is Varun also joining in on the conversation. Just wanted to talk about the under ownership in Reliance. Given that you're seeing, back-to-back investment from marquee names overseas, firstly, why is it so under-owned by the mutual funds here? And also, side by side, given that they will be deleveraging, and if they can meet their targets, shouldn't then this be on every fund manager's radar to kind of scale up as a position? And then either way the index moves, shouldn't it logically be definitely something you should include in your portfolio?
Yeah, that is true. Also, one factor is the weight for Reliance Industries is closer to 12% in, let's say, Nifty, right? So that's a substantial weight, and most of the fund managers have been following the company in terms of lagging in terms of the weight in their own portfolios. So we have been seeing quite a bit of buying which has been witnessed in Reliance Industries. Whether fund managers will be overweight position on a 12% kind of an index weight is something which remains to be seen, because fund managers tend to diversify their holdings more. They don't necessarily own more than 10% in single stock, right? So I think that's where I think primarily the difference in terms of ownership comes in, because of the overall weight in the index. But I think considering the current circumstances, we are likely to see strong buying support for the company, considering the amount of fundraising that the company has managed to do in these kind of circumstances. So I think strong buying support is likely over the next couple of months. If the stock were to fall a little bit, I think there will be buying support.
Seeing the valuations of RIL overall because of these transactions that have taken place over the last couple of weeks at current levels, what is your sense, and how do you see the rights issue also pricing in, which kicks off on the 20th?
Our sense on the rights issue is that at 1257, the rights issue looks attractive, primarily because if you look at the overall value of Reliance Industries, right, so 75% of the value comes from B2C businesses, which include Jio and also the retail businesses, right? So both these businesses, I would say that from a long-term perspective, look attractive, considering, you look at Jio, what's happening, right? So it's a big TMT play now, with the kind of marquee investors who are coming in, who have a lot of experience in this kind of plays, right? So from that perspective, at 1257, you are getting these business at a substantial discount to the current level. So that's what makes it attractive. That's point number one. Point number two, overall value from a company's perspective, the rights issue, because of rights issue, it adds close to 100 rupees in the overall value of the company. Because if rights issue would not have happened, then the company could have derated because of the challenges that we might witness in the oil and gas space for the company, right? So from that perspective, also this provides a lot of support in terms of valuations for the company. So my sense is that if I were to do an SOTP value, then probably the value for the company would work out to around 1680, right? Which indicates that there is still significant room left from the current level, and one should be looking at subscribing to the rights issue.
All right, Mr. Kulkarni, thanks so much for joining us this morning. It was a pleasure having you on the show. And moving forward and switching gears a little bit, Jayesh is always digging up what the mutual